Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. We're going to get to the markets, but with the politics of the weekend, and there's just no one that can help us better on the broad vision of what in God's name is going on in the heat. I mean, first of all, Tina, let's cut to the chase. Emma Raducanu, she tells Andy Murray she won't play doubles. Then she goes out and loses at Wimbledon. I mean, it was saved for the United Kingdom by Sir Lewis Hamilton winning the British Grand Prix. How did Britain get through the weekend?
Well, don't forget the European Football Championships.
Oh boy, that's right.
Yeah,
the UK won there as well. No, it's a good mood in London, dare I say, despite the fact that it did pour all weekend. We had elections where nobody objected, and right. and everybody politely handed over, and the moving van has already come and taken Rishi Sunak's stuff. So that was very civilized.
Paul he had an umbrella and a drink on his deck here. It's like 102 degrees here, Tina. And he said, get Tina Fordham. And he did so because the arch question in America Drive Time this morning is, what is the United Kingdom election? What does the French election mean for the first Tuesday of November in America? What do we take away?
It's a $1 million question, or maybe more. Analysts are like traders. We like to spot patterns, but it isn't very obvious what the implications might be for the U.S., except that surprises happen in democracies. In France, a surprise really happened. I mean, even though we observed how this very unusual to the American political mind, this collaboration between different parties, where candidates would drop out of races that were calculated so that the end goal of keeping out the far right would be achieved. Even then, the polls on Friday in France did not put this new left coalition in first place, and we went into the weekend still thinking that the front, I can't remember what they're called now.
That's okay, I can't either.
FN would be, the far right party would be the largest in parliament. We all were told that. Every poll Friday confirmed it. And that didn't happen. They ended up third. So first takeaway is your regular public service reminder, without slacking off pollsters, that polls are imperfect. People change their minds, and human behavior is incredibly difficult to model. So that is something we should take away into the U.S. elections, when we still have such narrow margins within the margin for error. So that's point one. Surprises and polling errors are with us.
Tina, given the elections both in the UK and in France, what does it mean for the UK and the European Union in terms of their relationship? Can they be closer together, or is Brexit still, I guess, kind of the issue for the two entities?
Well, Brexit was the word that dare not speak its name during the campaign. Keir Starmer, now the Prime Minister, did not actively campaign on reversing Brexit or anything like it. In fact, he said the day before Britain went to the polls that he didn't foresee that the UK would return to being a member of the European Union in his lifetime, thereby crushing the hopes of many, given just what a negative impact it's had on the UK economy and everything else. But in the first hours and days of the Starmer government taking over, we've seen some very positive noises about strengthening ties, about a defense pact. New Foreign Minister David Lammy went to Germany first. That was a clear signal, followed by Poland and Sweden, also very much with the NATO summit in mind. So the energy that this new British government is projecting is very much about strengthening the UK's relationship with its allies in the EU and in the United States.
So in the UK right now, what is the to-do list for this new government? Is it simply to project stability, or are there certainly some things they want to get done here?
Well, as is usually the case, of course, in national elections, the focus was very domestic. It's the first UK election that I can recall in my 22 years of being here where housing reform, reform to the planning process, was front and center, and also the UK's crumbling public services. These are in the top 5 concerns from British voters. So the new Chancellor of the Exchequer, the equivalent of Treasury Secretary Rachel Reeves, is talking a lot about delivering growth. But interestingly, for U.S. political observers, one of the lessons that the Starmer team took away from Obamacare and from Biden's industrial policies was the observation that they, delivered positive results, but didn't get much credit from voters for it. So they've come out against what they call deliverism, which I think is going to be interesting to watch.
One final question. Do you trust the polls in the United States of America?
I mean, trust sounds like it's something almost.
Are they useful? Are they
emotional.
useful?
They are. Any pollster will tell you a poll is a snapshot, not a prediction. Everybody seems to forget this. It's a snapshot of where public opinion is today. Do I trust the polls? I certainly use them as the only available quantitative measure, and I think that most people's gut instincts are terrible when it comes to reading the public mood. But the same with prediction markets, Tom. They are always wrong, and yet they're cited in every single sell-side research report. We're going to need to marshal as much data as we can, but I think we need to put it in historical context, and we need to think outside of the box when it comes to this U.S. election, because the playbook is going out the door.
Tina, thank you. Tina Fordham, just excellent. Can't say enough about her. Fordham Global Foresight with Citigroup for years as well. Joining us now, a young buck, Terry Haines with Pangaea Policy. I'm sorry, Terry, it really hit home. And I'm not frail, but there you are. What is the frailty measurement of this president this morning?
I'm on the large font club myself, Tom. So thank you all for gathering this morning. The frailty quotient is, I don't know. I'm not a doctor, but you can be frail and with it, and by public view, he goes up and down. So here we are, but he still knows how to give the middle finger to people, and he did that with some force on Friday night because he gave the middle finger to the Democratic donor class and a lot of the political class that all of a sudden decided he's not up to it.
Well, jump in here, Paul. I'm rattled by Rachel Bedard's wonderful essay.
So, Terry, I think if you were to ask John Q., Democrat out on the street, who he or she wants to be the nominee for the Democratic Party, they would probably respond, whoever can beat former President Trump, the Republican nominee. Mm-hmm. Do we have any idea who that is today?
Well, based on Bloomberg Morning Consult polling, it's Biden. Biden's right in there with an electoral college tally that is basically even with 77 unknown votes in the middle, and he's right there and able to right the ship. So this whole business that Biden's going to tank was wrong. The whole business that Trump's going to take votes from Biden is wrong, and that's really wrong. We've talked about that. I mean, whoever tentative Biden voters are, they don't want to go to Trump. And you're in a situation now where apparently the wheels aren't falling off. And I imagine that's part of the president's calculations, too, in that middle finger Friday night.
Well, the president is out with a letter just this morning addressed to Democratic lawmakers and released by his campaign, Bloomberg News is reporting. And it's, quote, I am firmly committed to staying in this race, to running this race to the end, and to beating Donald Trump, end quote. So there, I guess that says it all there. Terry, is that kind of where we leave it at this point?
Well, I find it interesting that everybody wants to give the smoke and mirrors on the political and donor side all the credence in the world, and Biden none of the credence. And Biden was, I thought, very direct on Friday night, regardless of what you think about the directness or how whether it's advisable or not. I mean, that's where it is. And unless there's another glitch of the kind that existed in that debate, he's going to stay in, and that's what he said.
Terry, Nick Thompson at The Atlantic had a brilliant observation. I'm going to paraphrase it here. I want to be very careful how I do this. He said, we've become parties, plural, but in the Democratic Party of an anointment by an inside group. You know, Clinton's plural, Obama's plural, et cetera. The Bushes on the other side, maybe Mr. Trump, et cetera. How do we get back to our Ute, where they actually, really had a debate with delegates involved? Do we get back to that, or is it just gone?
It can come back pretty easily, actually. You only need one rule change, and that's the rule change that since 1972 for Democrats, 1976 for Republicans, requires the delegate vote to be an assignment to be binding on the first ballot. You take that away and you get the old style conventions where people assemble and all of a sudden figure out, you know what, I don't like any of these people. We want to do something else. And that used to happen a lot. It can happen again. Might even happen this summer yet.
So I guess that goes to the next question, Terry. Should Tom and I be paying attention to these conventions this summer?
Sure, absolutely. Right now, I don't think right now, Trump's going to be the nominee on the Republican side. Right now, Biden's going to be the nominee on the Democratic side because nobody can tell him no, apparently. You've got the political class on the other side saying, well, he's got to make a decision by this Friday. Like, let's think about that. This Friday is just after the NATO summit and just before the Republican convention. So the look you want, Democrats and the press, is you want Biden to capitulate to Trump on the eve of Trump's convention. That's what you want? Right. Biden's not going to do that. Terry, they're stuck.
Because of time, Terry, I got to squeeze this in. You led with a single sentence that I've heard many others say now, that all that matters is the polls. When do we see polls besides the Bloomberg poll that was out? When do we see polls that quantifies pro-Biden, anti-Biden, for that matter, pro-Trump, anti-Trump?
I think you see them trickle in later this week, and there's probably another big tranche coming just before the Republican convention. I would urge you all to pay attention to only two things: what's actually going on in the swing states and whether they are registered voter or likely voter polls. Likely voter polls are what matters, and registered voter polls are pretty much all you're getting right now.
This has been brilliant. Terry Haines, as always, thank you so much with Pangaea Policy. Everybody leaning on what Brian Belski says. He's one of the piñatas on the street. He's been a bull. He's been correct. The Bears hate him. He joins us here from BMO Capital Markets. We were talking about Michael Mauboussin, and you were way out front of this. I think it was in his youth. He was at OPCO. He was still getting carded in bars downtown. Brian, I want to just talk about capital efficiency and that Graham, Dodd, and Cottle doesn't work in our analysis now. What are we missing about the capital allocation, capital efficiency of these technology stocks?
Well, thanks for asking. Thank you so much for having us, too. I mean, I think that so many investors, meaning analysts or hedge funds or whatever, have gotten away from looking at balance sheets and cash flow and everything. They don't even know what capital allocation is. And these companies have become so massively efficient, Tom. And I think that really began actually 22 years ago this month. If you remember, we were still trying to buy the dip in 2001, 2002. And I remember John Chambers coming out and talking about second quarter earnings for Cisco, and he said, we have no forecast. And the market was down.
I remember this crystal clear.
I was at a meeting. I was a strategist at Piper Jaffray at the time, and I was having a meeting at Morgan Stanley when they moved up in the McGraw-Hill building. And I remember that day in particular, and that was the bottom in the tech sector. And then from that place, that time frame, tech stocks had a massive secular change in terms of how they managed their capital, how they looked at cash flow. And I think the key thing with that is that through the cash flow and then filtering into the income statement, how their earnings actually became massively discernible and steady. That was the key thing.
Paul, you live this as well. I mean, the three of us live this. She was in fourth grade or something like that. But Paul, what's so important here is when I say these companies are running like 19th century merchant banks in Hong Kong, they're running for profit, not the normal securities analysis we grew up with.
So, Brian, but there is the risk here of concentration here. How do you get comfortable with this concentration risk in the S&P 500?
We've done a lot of the concentration work in the past, and people just kind of poo-pooed it. We've shown that markets can do well out of this super concentration. We are worried, quite frankly, on a near-term basis, Paul, that the market has gotten a little ahead of itself. I think that's pretty clear, and we have not had a correction more than 3%. And we need, in the second year of this cyclical bull market, remember, our call has been resolute since 2010 that stocks entered a secular bull market. U.S. stocks entered a secular bull market in 2009. So we've got about another 10 years to go if you want to do the quick math. But we need on average, we see a 9.4% correction in the second year of a bull market. So we think that we can see a correction, and that'll be your next great entry point. And oh, by the way, from a sentiment perspective, everybody and their mother, brother, sister, cousin, uncle is bullish. Everybody. And the bears are getting kicked down to the ground, and that's okay, by the way. Remember, bulls making money, bears are really smart. But at the end of the day, we need a bit of a refresh, and I think that's your next great buying opportunity in this next big secular market.
All right, you are at the Bank of Montreal. Let's throw a bone to our friends up in Canada. Opportunities in Canadian equities.
Oh my gosh. I think, I've been at BMO now 12 and a half years, and what I've learned is it's a great stock picking market. But I've learned also that it's a massively contrarian market. When everybody's talking about one thing, go the other way. So everybody hates TD in Canada. That's my pick to click. I mean, TD to 2024 in Canada is what Citigroup was to America in 2023. Everybody hated Citigroup, remember a year ago when they were cutting costs. I think TD is a great place to be from a contrarian perspective. I think from a stock picking perspective too, Paul, is that you want to look at the Canadian consumer and stocks like Aritzia and Couche-Tard, which is Circle K, if you know that brand. Very, very strong names. And Dollarama for that matter. So the Canadian consumer names look really, really interesting to us from a longer term side.
So does that mean the Canadian consumer is in pretty good shape?
Well, our work shows that
they have big home ownership issues.
Big home ownership issues, big debt issues. But what our work shows from a back testing perspective is that the Canadian consumer does very well if the market thinks they're heading into a recession. Now, the Bank of Canada is probably going to cut again. So the Bank of Canada thinks that Canada is going into maybe a little bit of a recession. That's when you want to buy consumer discretionary.
You got an election in the way as well. Brian Belski, you mentioned being contrarian, looking at consensus. Right now, the hedge fund zeitgeist is to be out of tech, more towards energy and materials. How do you interpret that?
Well, technically, from our U.S. Strategy perspective, we're underweight both materials and energy. Here's why. When inflation's going down, the commodity price goes down, and that means the underlying fundamentals are going to be going down in energy and materials. If you take a look at other areas of the world, there's other places to buy energy and materials, especially Canada relative to the U.S. And so while we own Freeport-McMoRan and we own Chevron and Exxon and Chesapeake and certain equity portfolios, we're not going to be overweight the sector anytime soon.
What are you doing with the glory stocks at the moment? Like, if you want to talk individual stocks, great.
Sure.
But as a general statement, what are you doing with those stocks as you listen to their earnings?
The Glory 7. I think we should come up with the Glory stocks. I like that. I call them the Super 7. I think the Super 7 could be your kind of consumer staples. They'll be your core holdings. And I think who would have ever thought that a trade down into a $500 or $800 billion company like Oracle is a trade down? I mean, how pathetic is that? But,
so retail is saying these are conservative stocks, and hedge funds are saying they're a volatility of a certain persuasion.
They are, and think about this. Bill O'Neill, which I learned the business from long time ago, and Lisa was in first grade or something like that. Let's just be clear on that. But he said that the institutional money is the smart money and retail is the dumb money. It's the exact opposite now. So institutional is all about what you did for me yesterday. Retail and private wealth is all about longer term. So private wealth, we think, is very well positioned.
All right, so we're going to have earnings starting actually Thursday. Some of the airlines come out, and then Friday, JP Morgan, some of the other big banks. What are you looking for? What do you think this market has to see in this earnings cycle?
Well, we've said that we could see a 1996 type event. 1996, Micron missed earnings. And if you remember back the second half of 95, the last quarter of 95 into 96, that's when the kind of tech got going. And it was earnings and fundamentally driven. Then it was momentum and dot-com driven. And that caused a pretty decent correction in the summer of 96. I think that could happen again. Now, a lot of people are giving me crap about looking at earnings so closely, but these stocks are priced to perfection. It's going to be more about what they're going to say going forward into 2025 and 2026 in terms of their growth rates. So I think we could see a bit of a correction there. But listen, I think earnings on the financial side are understated. I think healthcare earnings are understated. So we could see a kick there. I think financials, with respect to return on equity, is way understated as well. And I think you're going to see a surprise up there, especially in wealth management and the capital market.
What's a Belski correction look like? I mean, in this world, a pullback, 3%. Baloney, a correction's 10%, right?
Yeah, we need a healthy type thing that will scare people. I think anything over 5 to 6 will start to scare people. And then you'll have a little bit of capitulation, let's call it, in this type of bull market.
Some sweat, 2 p.m.
Let's
in the
sweat.
afternoon.
Let's feel some pain.
VIX goes out to 25 or 30. The good old days.
The good old days. We don't want people to lose money, let's be clear. We don't like it when people lose money, but we do like it when we see a little bit of air come out of this. And that's, I think, that needs to happen.
Single best idea, stock, go.
Netflix.
Yeah,
so think about this, what's happening at Paramount.
Wow.
Think about this. So our theme for communication services is cash, content, and consolidation. It has been all year. We were overweight last year, neutral this year because we thought there was going to be some consternation. Netflix is the Kleenex of streaming. It's the clear winner. It's the clear winner, and we think it's going to continue to win while all these others try to combine to take it on.
I mean, Paramount, just the opposite side of that trade, they get taken out today, arguably
down now.
Down, almost, about 0.75%. So go figure.
Oh, okay. Sorry, Bob.
The American consumer is super smart, though. They know the product that Paramount is offering, what they're going to be streaming. Just like on a retail side, they're super smart. They're going to go to Costco and Walmart all the time to get their stuff, but they're also going to go to like Lulu to get their specialized stuff.
That's Lisa. I can understand that. Brian, we got a couple of minutes left with you. We've extended this interview because, frankly, it's important. And Brian, I want you to talk about the job now where cab drivers don't have an S&P on their lap or a value line next to them looking at individual stocks. How has your world changed when everybody's in ETFs and index funds with an R squared of 0.98? It's a different world.
It's a different world. Like when I used to come to New York, you'd ask, when the cab drivers and the Uber drivers were talking about stocks, you knew it was the end. And now you have to kind of pull it out of them a little bit. It's more about when you're in stores and you're talking, or in restaurants and you're talking about how business is. You have to kind of do that bottoms up. But my biggest problem with the people that do what I do, and let's face it, it's a really, really tough job. Too many strategists and economists are worried about the market levels. They're forgetting that the stock market is a market of stocks. And I think that's where most of them have been wrong in terms of their market targets.
Let's talk market targets. You got SPX, I think, at 5,600. You guys were one of the first on the street to raise your targets. You initiated a 5,500 bull case back in November of 23.
Yeah.
Here we are. We're darn close to 5,600. Now where do we go?
Well, let's call it a day. The market's over. It's the end of the year. Listen, I think I still think we're going to get a better buying opportunity. What's really cool about corrections are, and especially in these big bull markets where fundamentals actually are leading, everybody keeps talking about momentum, but on average, you get like a 15% rally once we make a higher low, right? And so it depends upon where we kind of see the market going down in this correction. Tom asked a great question. What does a correction look like to us? We would love to see a 10% correction. Are we going to get there? I don't know. If we see an 8% correction, we're going to see a 12% correction because we're going to not see 10 exactly. So, we think that there's a likelihood of 5,600 is probably too low. We'll see if we have to adapt that, but we're very comfortable with where we are right now.
Brian Belski, thank you so much. The BMO Capital Markets there in the equities. I can't say enough about the acuity of his research notes, plural. We protect the copyright of all of our guests. Get that from BMO Capital Markets. He's got 4. They send like 8 notes or whatever.
Yeah.
He's got some intern way over, way too much energy. His
old
old assistant sent like half a note. Yeah, he'll be in. He's looking at Netflix. That used to be the note you got from Belski, and now he's got
Netflix has been a heck of a run.
It's like he's got. How many interns do you have? 3?
Interns? I have no interns.
You have no interns?
Listen, I've got one associate for 4
Ian
senior
Lingen,
analysts.
Ian Lingen has like 5 interns. What's the difference?
It's all about efficiency at BMO, man. We're efficiency ratio, man. 8th largest bank in North America, 4th largest bank in commercial, 4th largest commercial bank in the United States. That's your.
Are you and Ian Lingen on speaking terms?
What's that? Oh yes, of course we are.
What if we get a 375, 380 Ian Lingen yield? What does that do to your world?
Nothing. Nothing, because I think we're 350 to 450 for a while, and that's the normalization. This is really good. A 375 4, we'll take it.
Brian Belski, thank you so much.
All right.
With BMO Capital Markets. And the front page is the Lisa Mateo show. Lisa, I thought it was a great list. What do you got?
All right, boomer. Not sure if you guys have done this, but a lot of boomers are passing their wealth earlier to their millennial kids. Mm-hmm. There's a little bit of a catch, though.
It's called tuition.
They're telling Business Insider, the kids, if they get the money now, they're not going to expect that inheritance later. So you take it now, enjoy it because you're not getting anything later. They can give them yearly cash gifts, paying for grandkids, though, to go to private school, go to college. They're helping them with down payments for homes. But the millennials are saying they could use the help because what they made, compared to what their parents did at that same time is not the same.
Yeah, there's something that shifted here. This came up this weekend. I mean, when we were kids, you knew you'd go 3, 4, 5 steps down from your parents, If you grew up advantaged, you knew you weren't advantaged. My first apartment was above a pizza parlor on Monroe Avenue, down from Gitsy's hot dogs. And every night at 2 a.m., the cockroaches came upstairs.
Oh, no.
The kids don't want to do that now.
No,
they don't. They don't want to do.
I don't know.
What we did.
But that transfer of wealth, I mean, you hear it from these financial advisors. They're saying it's going to be trillions of dollars from the baby boomer generation to the next. And how do you get it from one generation to the next in the most tax efficient way? And that is an industry in and of itself.
I'll go with that. But also for me, and what's important here is what do they do with the money? I mean,
I told my kids the last check I write, it's going to bounce, baby. So,
there we go. Yep. Cruel and unusual Sweeney. Next.
So we talked about higher housing costs, right? Because that's the problem. A lot of kids can't afford to get the house. But it's also pushing couples to move in together earlier. So I know I moved in with my husband before we were married.
Oh boy.
Dad wasn't happy, but that's another story in itself.
Too much information.
But it did help, financially because we were able to split the rent. So a lot of couples are doing that. But the problem is relationship experts are saying that it's causing some friction within the couples. So they're breaking apart earlier. But hey, I'm going on 25 years, so it worked for me.
Exactly. It worked for you.
But it's not working for everybody, and that's the problem. So,
all right. But that you can see the economics. The housing affordability is just a huge issue.
Yeah, but the biggest thing in the country, can we all agree, the biggest thing is a single tax, joint tax differential. I don't get.
Okay.
They want to promote being married, so if you're joint, you pay less taxes than if you're single. I never got it.
No.
It's a big number. I mean, for a lot of people.
All right. What else
do you have, Lisa?
Okay.
That's way too much information, Ms. Mateo.
There we go. Retailers, they're rushing to ship their holiday goods earlier because they want to beat the rising freight costs. You have companies like Mayer saying that they're going to increase the freight costs. So they want to get ahead of it, right? So they're booking their peak season forward, moving goods from December holidays as early as April and May instead of July and October because they don't want to risk the empty shelves that we saw during the pandemic. So they're moving these these dates up higher, but it's a risk.
Why are freight costs rising? Is it because of oil, or is it the upset in the Red Sea?
I was about to say the Red Sea. It's a lot to do with the Red Sea and
This
how they have
is
to
a good
financial
shift
times.
around.
This is good financial times, and attacks on ships in the Red Sea have forced carriers to take longer transit routes, injecting unpredictability into global supply chains that increase port congestion from Asia to the U.S. East Coast. So, but again, that means more inventory on the retailers' balance sheet. So that could be a margin issue. Oh, that's interesting.
Right, because they're hoping that they have the consumer demand. Hoping.
That's right.
Can I just interject here that we did the children's names thing earlier?
Yep.
Yes.
You know, as a slot, I'm getting the amount of hate mail I'm getting.
Oh no!
It's off the chart. Everybody named their daughter Daphne, and it's my fault. I was making fun of it. I'm sorry, folks. I meant no ill will. Lisa, maybe
You're just a messenger.
We'll
That's
start
it.
calling you Olive. How about that? That was one of the names on the list.
Oh my goodness! No.
Next.
No, thank you.
Now, what kind of socks are you wearing on your feet when you wear sneakers? Let's say, are you wearing the low cut socks or the high cut socks? Because it's kind of an indication of how old you are. So
Right.
I don't know. I wear the low cut socks.
Me too.
But apparently it's this controversy that's kicking around about your sock height. So the higher socks where it covers the ankles, you know, like they
And
used to do
even
back
with
in the
sneakers,
day.
they wear the dark socks, which I would have got laughed off the playground if I did that back in the day.
But now it's the opposite. So you have this shift. So now it's popular to wear the higher cut socks and not the low ones. Apparently, I'm not the cool mom anymore. I was told that a million times. So this is a new thing. Teens and Gen Z,
The
they're
other
wearing
thing,
the higher socks.
it's important here, and I go to surveillance fashion slave Michael Darda of MKM Advisors. I mean, MKM Roth, I should say. And, you know, Darda wears the socks with, like, the flip-flops or the
with the
Birkenstocks.
little slides?
No go.
I mean,
Got it.
you know, this is a major source of conversation. You know, Afterthought almost threw a baked potato at me.
Yep.
I mean, what do you think, Lisa? Socks with sandals?
The kids do that with the little slides they
you
wear or the
can't do that.
Birkenstocks.
Darda's
but
styling that. You
I
know.
know.
Yeah.
He's out on some island somewhere, and you know, what do you think? I mean, help me on YouTube live
Yes.
chat. I mean,
Yeah,
should
we're
I
okay
be?
when we need you.
I can see me in the Doc Martin slides with the socks. What you know?
But you have to be the high cut the socks. You can't wear the ankle socks anymore, apparently.
ankle socks aren't
Yes.
cool.
It says that it means
Well,
you're
back in
30
the
plus.
70s, going back, you had the white athletic socks up to the knees.
Oh yeah, like the basketball players.
Yeah,
Real
and
old.
then maybe some wigwams
Can I-
on top of it. We wore two socks.
Right.
So we had the tube socks going up to the knee. Then we had what's are called wigwams.
Oh,
Go
the
Google that.
wigwams.
Go Google
Yes,
that. Wigwams.
yes. And you kind of push them down. You scrunch them down. And
that's
they,
what you wore in Trenton CYO basketball. That was the uniform back in the day.
If I can bring this back to something to do with economics, finance, investment. I'm sorry, this weekend, inflation is pernicious. It's out there in every single transaction. And the bow ties, the suit and tie crew we talk to, they're not talking the same thing I'm living or anybody else is living. It's tangible, the inflation.
It's just
And
that
it's every single thing.
It's you see it in the restaurant. You see it at the grocery store. You see it. Did you see the price of the bow ties? Did they go up?
Yeah, they did.
See?
Yes, thank you. It's a French provider. I think they'll still be in business after the French election. And, yeah,
but it's just the absolute level of prices. And so the question I've here, when will we get accustomed to this new level? And
we'll
then
get
and then
accustomed
we
to
start,
it when our wages go up.
Yeah, but
know,
the
that's
wages have
always-
been going up faster than inflation in the last couple of years, but still not there. Still not there, I think.
not
So
sure.
that's the question. When will we all become accustomed to this new price level that we don't think about anymore?
Lisa Mateo with a strong newspaper segment here on a Monday. Thank you. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.